Hey, aloha everyone, this is Patrick from Keller Williams. I wanted to make this video to go through the market update for February of 2019. This is going to be a nice quick bird's eye view, and this is going to be more of the longer version that kind of goes through some factors that we saw, some changes that happened from a year-to-year basis from February 2018 to 2019, as well on a month-to-month basis on what's happening in the market so you can stay educated, whether you're a buyer or seller, just so you know if you have any leverage and what the market's actually doing, right? So let's jump right into it. So here's our monthly indicator. We are measuring February of 18 compared to February of 2019, and we're going to go over a couple of the factors and numbers we like to look at to really get a stronger idea of what's going on in the market, because there's a story that's told here through these numbers, and I'm going to educate you a bit on what that is. So the first thing I like to look at is inventory. What is our inventory looking like? Because in a seller's market, you have inventory that's below 6 months, and this is based on the mainland. In a buyer's market, you have inventory that's above 6 months. And what does that mean? That means if we had 100 units that were on the market, and for 6 months, it would take 6 months for all of those units to get sold, right? So that means that it's technically a buyer's market if it's 6 months or above. If it's below 6 months, it's a seller's market. If it takes shorter than 6 months to sell all of those, then it's really a seller's market because inventory is just flying off the shelf, right? Now, in Hawaii, we are actually using pretty much half of that as an indicator because this market is pretty steady compared to the mainland. We never see big dips. We see subtle, tear offs. But with that being said, usually we're looking at about a 3-month amount of inventory. Once it's over 3 months, we are then in a buyer's market. When it's below 3 months, we are in a seller's market. Okay, so we can take a look here. From last year, we can see that there is a shift happening here. Last year for single-family homes, the inventory was set at about 2 months. So that would take, if there's 100 units, in 2 months, all of them would be sold. Now we're seeing in a 1 year later that it would take 3.2 months for those units to get sold. So we're starting to see a shift towards a buyer's market. Not a huge shift, but we are seeing a shift. And with condos, we're seeing the same thing. You can see down here, it's 2.5 months to sell all of those units. And 1 year later, we're at 3.6. So we are seeing a change. Again, the numbers are a bit skewed because we're here in Hawaii, so we're not looking at a 6-month benchmark. We're looking at a 3-month benchmark. But we can see that there's a shift happening. And this is based on a lot of different economical factors, interest rates, things that are happening in politics, tourism, construction. And I'll go over that towards the end of the video on other things we'd like to keep a pulse on to know what's going on in the market and to kind of foresee what is going to happen. But let's keep digging into these numbers. Now, another thing I like to look at is what's going on with the average sales price. Median sales price is good, but average sales price is better data to base off because those are properties that actually got sold, not ones that just sat on the market, right? So we can see here for single-family homes, there was an increase, not a large increase, only about 0.8%, but there was an increase in the average sales price. So we're still seeing that the market's going up for the price of homes and what they're averagely getting sold at year after year end. Now, the interesting thing is we saw a bit of a shift happen for condos. So last year, condos were averaging sales price was $512, and now it's at $499. So we had a negative 2.7% change in the average sales price for condos. So what does that tell us? That tells us that if you are looking to get into a home, maybe it's your first time home, condos are probably a good route to go right now because we can see they're on a downswing if you compare it to last year. Okay. So that's a great thing to look at. Another really smart indicator to see whether we're in a buyer's market or seller's market is days on DOM or days on market. How long that property actually sits on the market until it gets sold. Obviously, if it takes only a couple days for it to get sold, you're in a seller's market because that thing is just flying off the shelf. The longer it takes, then we have to actually start discounting the home, and you'll actually see that it's starting to shift towards the buyer's market. So we can actually see here that in single-family homes, we can see that the average days on market in February 2018 was 19, and we can see it's now at 25 days on market before it actually gets sold. And then for condos, we're looking at 23 days to 25. So not a large change here, but a pretty significant change in single-family homes. Now, one last thing I want to go over is the percentage of original listing price. Okay. So this is basically if I price my home at $1 million and I sell it for $1 million, that would be 100%, right? This is what I listed at and that's what I sold it at. If it goes below that, the percentage of 100% goes down, depending on what the amount was. So you can see here on the percentage of original listing price received in February of 18, basically whatever you listed the home at, as long as you're working with a good agent who knows what they're doing, it got sold at that price. We can see a 99.7%, almost 100% of the listing price is what the sellers were receiving. Now we're seeing a little bit of a change, a negative 3% change in the listing price. If I put it at $1 million, I'm probably only receiving maybe $990. We're seeing a subtle change that instead of getting a bunch of multiple offer situations and making sure that we get the listing price that we want, we're seeing a subtle change of that dropping a bit, right? And we're seeing in the condo market, it's pretty flat. It's pretty much the exact same thing. So it's kind of interesting to see the dynamics of the changes that happens in economy and how that changes what you price your home at and when you actually receive. And I will go into another video that discusses strategic pricing and how we do it to make sure that we always get asking, if not over asking. But that's for another day, a different video. So let's continue with the market update. So now we are looking at new listings that have hit the market. So what you'll notice is a couple trends here, right? So the first thing that probably jumps out at you is these dips. Now these dips of new listings that come on the market, you'll notice something here. It's always in December. It's usually in November, December. And why is that? Holidays. People are busy with their families, so they don't have time to actually list their home, or they want to do it after and not have to deal with the hustle and bustle of people walking into their home. So that's usually the normal trend you'll see in these months. You'll see it repeats here, and then it also repeats over here. And what we can see here is right after the holidays, we usually see a recovery spike, and then a subtle dip after. Now what we are noticing here is that there is a dip, but it's not as subtle as we saw last year, right? It's actually a significant drop in the amount of new listings that are popping up. So it's just something we want to keep an eye on, because that kind of tells us that inventory is starting to dip a bit of new listings that are coming on the market, and they're basically matching the condos to single-family homes. Moving on, we have active listings. So these are listings that are actually active on the market. We can see that there's a spike going up, and again, this is because the days on market are actually being longer. We're seeing a small shift towards buyers. So those active listings that might have gotten sold in the first 15 days last year is not the case. So they're sitting on the market. So because of that, we're seeing actually a larger number of active listings in the market in the month of February 2019. Moving on, we've got closed sales. So this is another thing we like to look at. As we can see, again, we're seeing a shift going down in the amount of properties actually getting sold. And this is another thing that goes back to the small shift that we're seeing in the buyer's market, interest rates going up, things that are creating a smaller buyer pool so that there's less people to actually put in offers on these properties, meaning less properties are getting actually closed, which is good for buyers, right? So we're starting to see a bit of a shift. Now for you buyers out there, you're probably, if you're shopping right now, you're probably used to seeing lots of multiple offer situations. This is good data for us realtors, but also for you buyers to really understand the kind of competition you're dealing with. This goes over single-family homes sold and the price points they're sold at. So we can actually see that a bulk of the amount of homes being sold is going to be in the range of $500,000 to about $1 million. That's the bulk of people in Hawaii and what they're buying. These are the amount of properties that were sold in the month of February and at the price point. What we're also noticing, though, which is kind of interesting, is we're seeing a spike in basically $2 million and up homes being sold. So that's kind of an interesting thing to look at. We're seeing that the luxury market is actually starting to grow. And then we can take a look at condos, a similar thing, but where the price points being different, obviously. We're seeing a bulk of condo sales between 200 and 500, but we're also seeing luxury condos starting to pop up as well, anywhere between the $900 to $2 million range of condos being sold there. So that's just another interesting thing to take note of. The average sales price, as we said, in Hawaii, we don't see large dips. Usually we just see certain flatten out spots, and we can kind of see that in the condo market. It's pretty steady. In the single family market, we do see some small mountains and gullies, but it's pretty subtle, and we can see here that there's nothing too radical happening with the appreciation of homes and what they're actually being valued at, which is good for sellers. They're not the crazy numbers that we were getting in a couple months ago compared to where it was. There's some peak spots, but it is starting to recover a bit more, so that's a good thing to keep note of. And then going back to the average or median days on market, we can see all of last year that we were floating in that 20-day range, and it's climbed up to about a 30 and starting to drop a little bit. But we are in a higher amount of days on market, which means that the inventory is sitting longer, which means the properties are getting discounted more. Which basically, generally speaking, says that we're starting to see a subtle shift towards a buyer's market and an advantage for buyers. So that's a good thing to keep a note of. And with that ongoing trend, prices of properties staying on the market longer, which means that they're actually going to get discounted, and we can see that that's subtly happening here in the single-family home and subtly in the condo market. But we can see that it was selling at about 100% of whatever the listing price was in December, and then we saw a drop off in January and February that homes are getting discounted a bit. They're getting priced a little too high, and that's basically keeping certain people out of the opportunity of buying it because of interest rates going up, right? So that's a subtle shift we're seeing. Again, this is all the things all connecting and working together to tell us a story of what type of market we're in. Now here's another thing I'm quickly going to go over. I'm going to make a whole another video going into it, but for you investors or people looking for investment properties or just anyone just looking for a deal, everyone's always looking for a deal. But another good number we like to look at when we're looking for a deal is the difference in the percentage of price actually sold at, like we discussed before. So what I like to look at is this is a breakdown of all the different areas within Oahu, and what I like to look at right away is the percentage of original price received. Okay, so if we see a big negative, that basically means that homes there are starting to get discounted. They're not getting sold at the price they used to get sold at the year before. And the biggest one that jumps out at me is the Kahala. So this was a big booming spot for people to buy homes last year, and we're seeing a discount of 24% happening. We can see here 77.5% is what people are receiving of their listing price. Now there's lots of nice homes over there, so that could, I'd have to dive deeper into those numbers. We can see the medium sales price is almost 2 million, 1.8. But this is something we do want to keep note of. And you can always look at the factors here. Another big one we see here is, let's see here, negative 5% here in Diamond Head. So these are kind of important factors we want to look at. If you're not so attached to one specific location, or if you are looking at a location, or maybe 3 or 4, this is a smart way for you to look at it and see what the market's doing in that area, and if you have any leverage when it comes to putting in an offer, or if you're selling the property. Now the last thing I'm going to go over is certain aspects of economic factors that we like to keep a pulse on to know what the future holds for us in the real estate market. And there's a couple things here in Hawaii we like to focus on. Those things are tourism, military, construction, and the mainland market. What's going on in the mainland, because that can affect what's going on over here. So let's take a quick look at that. In tourism, we did see that there is a increase in the amount of tourists showing up, but for some reason they're spending less, which is interesting. But that really doesn't matter much. What that really just tells us is they're spending less, but they're still coming here. So that's great to see that we're seeing an upward trend of more people showing up here, more tourists showing up here. And why is that important? Well, we can see that 125,000 or 5.7% of them are Japanese. We've got U.S. East, 2% there. We've got a variation of different types of buyers and tourists showing up here. So it's a good thing to keep in mind of the type of buyers you might be working with. And yeah, it's an important aspect to look at. Also, we are seeing, that was me discussing the less spending. Southwest has opened up routes to Hawaii, so now we're going to get even more visitors, which is going to increase the amount of money spent in our state, which is going to allow people to have more jobs and the economic growth, right? And I'm just going to quickly go over this because we're running out of time. Other important aspects we like to look at, the local market. One thing we like to look at is, more importantly, is what's going on in the markets on the other islands. So usually on the other islands, what we notice is that they're the first to see growth, but the first to see decline. So if we see any decline on the Big Island of Kauai, we can probably guess that that's going to start to shift over to Oahu, or vice versa. If we see usually if we have growth here, they're the last to see that growth. It's almost like a spillover. But we are the first to, they're the first to actually have any issues that come up, or if we see any dips in their market, we'll see that dip on our end in the near future. The last thing I want to go over is military. We've got some great military growth happening. With more military, we've got more buyers, and that pretty much wraps it up. And that's all the time I have. I'll talk to you